Let me just tell you this, real estate sector does not make you rich. What makes you rich is what you know about the sector. See, it is true, we know that real estate is one of the most reliable tools for building wealth in the world. Yes, agreed. It has also destroyed a lot of people who entered it without knowledge. There are some properties you buy in some location that your property will just lie there dormant, no appreciation. You know why? Because where there is no demand for a particular property, there can never be an appreciation on that property. The most expensive thing in real estate is ignorance. Your lack of knowledge for how the business works is the reason why you're going to lose profitable deals. See, there's the false narrative that real estate only goes up. It is not true, it is half truth. For you as an investor, you don't want to work with that truth because a land that is poorly chosen in an area may be the doom of that your investment. So as an investor, you want to manage your risk. You want to know the kind of risk you should even take because there are different kinds of risks when it comes to real estate. The first risk that I think you should consider is the developer risk. You remember in one of my previous videos, I said, first, you are buying into the developer, into the person behind the deal, not the asset itself. Because the person behind the deal can make or mar that deal in the first place. Imagine the person you are buying into, that developer has a court case or takes your money and refuses to do anything, and after 2 years, that project lies dormant, goes away and blow up your money. What will you do? The money is just there wasting away. Another risk that you should be mindful of as an investor when it comes to real estate is title risk. I know in one of my previous videos I already mentioned that one of the titles that you should be aware of is C of O. As a matter of fact, I made a video and I explained the difference between the C of O, the R of O, and the deed of assignment, because all these three titles, they hold different ground. Another risk is a location risk. There are some properties you buy in some location that your property will just lie there dormant, no appreciation. You know why? Because where there is no demand for a particular property, there can never be an appreciation on that property. There are some areas that already 10 years from now, whether you like it or not, infrastructure can never go to that area. And you buy that property for the sole aim of investing. No. Especially when your aim is a short-term investment. Be rest assured that you can never get a return on your investment at that particular time, except you are ready to just forgo and just leave that property until God knows when infrastructure will go to that area. So location is a risk that you want to consider when it comes to investment in real estate. So for you as an investor, you must also consider your liquidity risk. See, real estate is not like stock market that you can just exit anytime you like. You have to be sure that as at the time you are exiting, except you're ready to just forgo and just let go whatever you can make out of it. But if you want to make your money out of it because you are investing in it, you must be sure that your liquidity risk is well managed, such that you can have a free exit. As at the point you want to exit, you are also exiting with a good return on investment. Why? Because there is a demand already for that project or that land as at that time. See, there is also market risk that you also want to be aware of as an investor. The government can make some policies that will not be favorable to you, and you are an investor investing in real estate. There could also be devaluation in currency. So what will you do? So you see, for you as an investor, your angle, your perspective, your understanding about real estate is very, very important. You must be aware of all these things before you just venture into it. It's not like every other business that you can just go in and go at any time you like. You must be aware of some risks that are very, very important to you as an investor. There is also the legal risk. Remember my previous video, I have been mentioning it. For every property or land that you want to buy or acquire, you must be sure that you have the full legal backing of the government, because the government holds the land for you and it's for a period of time. So whenever you are acquiring that property or whoever you are acquiring from, you must be sure that there is a proper documentation on that land. Go to Aegis, go and verify, search. Be very, very sure that this land that you are buying, this property, there is a proper documentation from it. And you must be sure that when you search, as at the time you are searching, the name that appear on that property is the same name as the person who is selling it to you. Because if you are not sure for these things and you are just taking risk anyhow, at the end of the day, the government can revoke that land. So what will you do? Imagine you spent millions, even billions of naira buying a property, and at the end you find out that there's a claim on that property, and that property is not the person who sell it to you is not even the real owner. Now you join the queue of people who go to court every day, laying claim over a property that is not allocated to the owner or whoever claims to be the owner. So you have to be very, very sure of all this risk. It's not just a venture you want to go into and just play with it without even understanding the risk, without knowing the rules governing the market. Another risk for you as an investor that you want to take note of is construction risk. See, for you as an investor, you must be sure who is the developer you are working with. For instance, what happens when there is an inflation and the developer you are working with has not even done a risk against inflation? What will you do at that point when the cost of building material keeps increasing? Or imagine that you are working with a developer that is working with substandard material, or you have a shortage of material while developing. So these are risks that you have to be aware of. And that's why if you are going to invest in real estate, you have to be sure who is the person that you are working with. If you are going to be working with a developer, these questions, these are things that needs to be answered. How is this developer? How does he intend to develop your project for you? And how fast can they develop the project? Be mindful. See, there are some developers that after making a purchase, take for instance, you buy a property for an off-plan price. And after 2 years, the developer is coming back to you and telling you that, okay, and the price of material have increased in the market. What's your own business with that? But there's some developer that will do that to you. Why? Because they did not run their own risk against inflation. And as at the time that they project, they cannot even deliver at that time. So these are risks that you must be aware of before you make that decision of going into real estate in Abuja or in any part of the country you find yourself. See, the truth is, every risk has its mitigation strategy. Yes. But if you don't know it, how do you want to apply it? So you must know how this risk work in real estate so that you can know how to mitigate it. So if I were you as an investor that wants to go into real estate, don't go with the mindset of an investor. Me too, I'm an investor now. I'm investing in real estate. I'm buying property. So that they will just call you, investor. They are saying this, they are saying what the investors say that we have. You need to raise your hand as an investor. Don't be so quick to go into real estate as an investor. First, go with the mindset of a student. Go learn, understand. This property, this business I'm about to venture into, what are the risk factors that this business holds? What are the principles, the regulations governing this business? What are the strategies that I must know? What are the exit plans that I must know? You must know the right strategy to use before you enter into real estate. So if you must manage your risk, my advice is, if you are going to enter into real estate as an investor, never invest in money that you are not sure that you can lock away for the next 3 to 7 years. Because the best way you can make maximum return on your investment in real estate is to lock away your money for the next 3 to 7 years at least. So you see how this shapes your mindset. So if you have this mindset, you know how to venture into real estate as an investor. And the sure and safest way for you to mitigate your risk is to ensure you verify all titles from the beginning to the end. Don't overlook any. Ask for all the titles. Make sure the developer or the owner of the land, the claimant, or the real estate company give you the title of the document. Let them show you. Go and do your verification. Don't even accept the one they show you. Make sure you go to ages by yourself. Go and verify. And my advice to you, if you are an investor, especially if you are not a first-time investor in real estate, don't put all your egg in one basket. What do I mean by this? Diversify your assets, your funds. Don't invest all your funds in one developer. At least make sure you are working with 2 to 3 trustworthy developers with a proven track record. Remember, I've made a video on this. I told you are investing first in the person, even before the asset. So make sure that you are working with at least 2 to 3, 4 developers if you are going to do investment in real estate properly. So make sure you diversify your fund. These are the ways you can mitigate your risk. What if you are investing in one developer only all the time, and all of a sudden that developer decides to run away with your money? At least if you have 2, 3 developers that are working with trustworthy developers, if one messes up, you are sure of liquidating your assets from the other developers. And as an investor, another way to mitigate your risk, I don't understand, if you're an investor, then you should be able to go all out when it comes to real estate deals. You must work with qualified personnel, work with qualified lawyers, work with qualified land surveyors. Make sure that the people who vet the properties are qualified professionals who knows about that properties, who know how the terrain of the business works. Let me leave you with this. The most expensive thing in real estate is ignorance. Quote me again. The most expensive thing in real estate is ignorance. Your lack of knowledge for how the business works is the reason why you're going to lose profitable deals, and it's the reason why your money may go to waste and your land may lie dormant for the next 20 years. So don't invest with your eyes closed. Invest with the right knowledge of how real estate works. I'm the Global Olawale. I help people make smart investment decisions in real estate. And until I come your way again next time, bye.